We're talking about HARPTA on this interview. Are you ready? Let's go! Hi, thanks for tuning in. My name is Dean Ueda, and I'm a real estate investor and realtor in Honolulu, Hawaii. Today, I have the pleasure of interviewing Brad Konishi, who I consider to be the HARPTA Guru here in Hawaii. So let's say hi to
Hey,
Brad.
how's it going, Dean? Nice to see you again.
Yeah, same here. Before we start off, let's do our disclaimer and say that, this is not professional tax advice. This is for edutainment purposes only. And, all situations are different. So please consult with your personal tax professional for your situation. But yeah, Brad, why don't you start off by just telling us about yourself a little bit?
Okay, sure. Well, let me first talk about how we first met. Dean and I first met. We were both auditors at PricewaterhouseCoopers, and that was back in the early 2000s. Early 2000s makes me feel old when I say that, but early
Yeah, YG.
2000s, yeah. And so that's how we first met. But we reconnected because we're both in the same industry. After I left public accounting. First stop after public accounting was as the controller for the Honolulu Board of Realtors, and did that for a little while. Then eventually found myself, wanting to be self-employed, work for myself, and so opened up a tax practice in 2009, specializing in assisting realtors and their clients. But also too, at the same time that I was doing that, actually in 2004. I started teaching a 6-hour GRI class to realtors. And in that class, about a half-hour portion of that 6 hours was devoted to HARPTA. So I was talking about HARPTA since 2004. But, my knowledge of HARPTA didn't really start until I opened the tax practice in 2009. I knew about what HARPTA was, from a book perspective, but I hadn't, never done any of the HARPTA filings before. So when I opened my tax practice in 2009, occasionally I'd get requests to do HARPTA filings. And so because, I'd get those requests and because of the industry that I specialize in, I figured, I'll learn more about it. And so started to do more HARPTA returns, but, they didn't come very frequently, just maybe once or twice a month, is the most I'd get. And then I think it was probably around 2017 or so. I was doing a search online, just looking at domain names to see what's available, and I had checked, over the years, if HARPTA.com was available, and somebody was already sitting on it. I mean, they had the domain name reserved, but they didn't have a website that was kind of tied to it. But one night in 2017, I found that it was open, and I took HARPTA.com, and then shortly after that, about maybe 4 months after that, HARPTA, which used to be 5%, jumped up to 7.25%. And so because because that happened, and I had no idea that was about to happen. But shortly after that happened, I decided, you know what, let me actually create a website. And so I created a website on my own, and posted it, and believe it or not, I started to get traffic. And then, I saw my website slowly climb the, Google results, and I started getting more and more calls. And so, around mid 2019 or so, I made the decision that, you know what, I think we can make HARPTA itself a business, and then I can, I close my tax practice. And so, at the end of 2019, I closed my tax practice, and then just sunk, I sunk all my resources into HARPTA, at the beginning of 2020. And so that's kind of how I went into it. So yeah, it's been fun ever since.
Oh, cool. Well, I guess we should address the simple question, softball question. What
Oh
is
yeah.
HARPTA?
Okay, yeah. Yeah. HARPTA is actually an acronym. It stands for the Hawaii Real Property Tax Act, and this is a tax act that essentially requires Hawaii non-residents to pay a 7.25% withholding 7.25% on the sale price of their home. And this withholding is for the state of Hawaii, just to ensure that, somebody who's a non-resident doesn't sell real estate in Hawaii and then, disappear without having to pay, all the taxes that they owe, whether it be capital gains tax or, transient accommodations tax or general excise tax, which are a bunch of taxes that, we have here in Hawaii.
And who is responsible for HARPTA?
Oh, that's this is something that's a little bit odd because it's the seller who actually has HARPTA withheld from their proceeds. So it's the seller that's feeling the pain, but it's actually the buyer who is
Yeah.
responsible for the
Yeah.
collection of HARPTA. So the buyer is ultimately responsible for ensuring that HARPTA is collected, but it's the seller who actually
Yeah.
feels the pain of the collection because
Yeah.
the withholding of the HARPTA is done from their proceeds.
Yeah. I'm glad you brought that up too, because it's oftentimes, to your point, the seller's like complaining, but then the buyer side, when we're closing, they ask me, why is escrow having me fill out these forms? And I say, well, the way the tax law is written, it's actually the buyer's responsibility. So I'm glad you clarified that.
Yeah.
But the great thing is we have, escrow company facilitating this requirement, right? From the standpoint
Yes.
of there's the ones submitting the paperwork and the payment for the buyer's requirement. Yeah.
Yeah, that's
Yeah.
correct. That's correct. Yeah, the escrow company is essentially a facilitator for all the paperwork and the flow of the funds,
Yep.
from the seller's proceeds
Yep.
to the state of Hawaii.
Yep. So I always got to explain it to the buyer, and the buyer's like, "Wait, what?" Right? Because it's a big chunk of money, right?
It
And
is.
then when you tell them, well, they're technically responsible, sometimes my buyer's like, "Wait, what?" And they kind of, but like you said, a lot of some explaining to do, and that helps, right?
Yep, yep. Hmm.
So of course, paying withholdings, HARPTA withholdings is junky,
Yeah.
right? Affects investors' cash flow, but
Yep.
upfront you can do some things, potentially waivers and reductions.
Yes, yes.
Uh,
If somebody is, of course, it isn't allowed in every situation, but for some sellers, they're allowed to, if they have enough time, they're allowed to either get a reduction or a waiver of HARPTA. So let me quickly talk about reductions of HARPTA because those are only allowed in a very specific circumstance. Reductions are only allowed if the buyer, or excuse me, if the seller is being told that if they want to sell their property, that they need to bring cash to closing. So in other words, the seller is in a position where they have very, very little equity. And, whenever you sell a home, if you've ever sold a home before, there are a lot of costs that go into selling a home, things like commissions, escrow fees, transfer taxes, all those things are a lot of money out of the proceeds from the seller. But then when you layer on top of that, an additional 7.25%, sometimes it puts the seller into a position where, at the very bottom of their what's called an estimated seller statement, instead of cash to seller or cash due to seller, it's cash due from seller. If HARPTA is layered upon all of those other expenses, and so it doesn't happen too often. But when it does happen, the state realizes that the HARPTA withholding really has the potential to completely annihilate this transaction, right? I mean, for a lot of these people who have very little equity and are trying to sell their home, they don't have the 20, 30, $40,000 to bring to closing just to get their home sold, right? So so what the state does is they recognize that this is a real impediment to getting a home sold, and so the state's way of making sure that they don't stand in the way of this transaction is they allow, in that limited circumstance, they allow for somebody to get HARPTA reduced such that they don't have to bring cash to closing. And so that's the primary, that's the only way, essentially, to get HARPTA reduced. But there are a number of ways to get HARPTA waived. So let me go over some of the ways that we help people get HARPTA waived. So one of the ways to get HARPTA waived is if you can prove to the state of Hawaii, and once again, this has to be done prior to the close of your sale. So somewhere in between the actually acceptance of an offer and the closing of a sale, you have to prove to the state, so you have a limited time to prove to the state that this transaction is going to turn into a tax loss for the seller. So the way you do that, of course, is by documentation, and there's a form called an N288B that you would complete, fill out, and then file with the state along with your documentation and your support. And then if you can prove to the state, once I sell this, I'm going to have a tax loss. Can I get a waiver? Oftentimes the state will provide a waiver for those types of people. But there's also a circumstance for military service members. Military service members who are not Hawaii residents, and that makes up a great majority of the military service members who are stationed in Hawaii. If they're not service members, or if they're not residents of Hawaii, what will happen is when they sell a home in Hawaii, they will have HARPTA withheld. But sometimes they meet occupancy standards that will allow them to get a waiver of tax, on the sale. And this is due to a tax rule called the main home gain exclusion. And so if somebody is eligible for a waiver of the taxation on their gain because of the main home gain exclusion, we can apply for a waiver based on that. And so there are certain things that we need to prove to the state to be able to get a waiver. So I know there's a lot of things, but those are different ways to get either waivers or reductions of HARPTA.
Awesome, awesome. So let me ask you this as a follow-up.
Hmm.
Us knowing the state and sometimes the red tape, logistically, is it reasonable, or do we, when we have a legitimate case, do we always get our waiver accepted in time for the, given a regular 30-45 day close?
Yeah, no, that's a great question. Number one, the state does have a deadline to file if you're filing for a waiver or a reduction, and that deadline to file is 10 days prior to the close of your sale. So you need to turn in any kind of filing or request to waive or reduce your HARPTA no later than that date. And so one thing that's surprising, and this is going to be a surprise for somebody who's worked a lot with the state, because the state has sometimes a somewhat of a well-deserved reputation of not returning paperwork on time. But this is one area where they have been incredibly responsive. In 2023, we actually have, we just did a count of every request for waiver and the reduction that we did in 2023. And we had a little over 150 that we did in 2023. Every single one was returned within the 10th, before the 10th business day. So we were able to get every single one returned on time. And so, the state is, from what I've been told, the state is aware that this is one area that they can't, be slow in. And the reason why they can't is because, something as big as a real estate sale has the potential to completely crumble if they don't get this done in a timely manner. So I think for that reason, there's kind of a fire lit under the people who review those HARPTA waiver and reduction filings, that they get them back to us real quick. And that wasn't always the case in prior years, but in prior years what was happening is the mail was what was slowing everything down. So to kind of bypass that, we deliver our forms directly to the state office that reviews them, and we pick them up after they've been reviewed, and we get a certificate. We pick it up directly from the office. And so that's one of the ways that we kind of get rid of that. Yeah, get rid of that lag.
Oh yeah, that's smart. That must save you like almost like a week of
Oh yeah,
time, yeah, for
and
mail.
you know what? It's not always the USPS that is responsible. It's sometimes it's a mailroom. So if the
Oh,
state, if the everything gets reviewed in the office audit section, but if they want to mail stuff out, it gets sent down to the mailroom, and then sometimes the mailroom is the pinch point. And then also two things coming in, it has to go through the mailroom before it gets to office audit. So it's a combination of USPS and the mailroom that was causing problems. So
Ah,
we made a decision, as after the COVID shutdown, we made a decision that we're going to deliver and pick up in person, and this is the only way to kind of eliminate that problem.
yeah, amazing with the world we live in with AI and everything, we still have these kind of issues.
Yeah,
But
exactly.
oh well, that's another conversation.
Yeah.
Cool. Okay, so those are for thanks for talking about that. Now, typically my clients, they're it's all like long-term holders that have gains and can't get out of waivers or with reductions. But how about if withholdings are already withheld? Is there a way to get it back quicker?
Yeah. Yeah, there's you said quicker, and I guess you're referring to the fact that if you don't mind waiting, the option that you have to get your money back if HARPTA is withheld. And I should speak to this because I'd say in probably at least 95% of the cases, and I'm not exaggerating when I say this, in about 95% of the cases, HARPTA is just like an egregious over withholding. So in other words, way more is being withheld than is needed to cover the tax liability.
Mm.
So that being said, there are a number of ways to get at least sometimes all of the money back, and the easy, the simplest way, and like I said, is if you don't mind waiting, you can always wait till the following year. Let's say you have a transaction in 2023. In early 2024, once the tax season opens in February, you can file a Hawaii income tax and you can get your money back then. But sometimes, people don't want to have to wait that long, right? I mean, let's just say somebody had, closes in January of 2024. If they wait for, to get their refund via a tax return, they're going to be looking at sometime maybe April, May of 2025 before they get any money at all, right? So besides, waiting and doing a tax return, you can also file for an early tentative refund. And this is, another service that our company does is if somebody has HARPTA withheld, there's a form called an N288C. And the purpose of that form is to prove to the state that your liability, the home seller's liability is actually going to be less than what the state is holding. So in other words, let's just say the state is holding $70,000 in HARPTA withholdings, because that's what the calculation came out to be. So state is holding on to about $70,000. But let's say we can prove to the state that the taxpayer's liability for tax is only, say, $10,000. Easy enough to do by showing, okay, this is their gain. This would be the tax on their gain. So if we can prove to the state that their liability is only $10,000, in the year of sale, we can get a refund of, say, in this example, $60,000 for the taxpayer in the year of sale. And so, this is one way that, this is a relief valve in many ways for people to get at least some of their money back, without having to wait for a long, long time. So yeah, that's a way to get your money back, is to file for the early tentative refund.
Okay. Okay, here's a question. Are there ways to get out of HARPTA, avoiding it, not evading it, but avoiding like
Yeah,
loopholes, I guess,
yeah.
besides the ones that we talked about so far?
Yeah, yeah. Sure. There are a number of ways. If somebody goes into contract, what's going to happen is every home seller who goes into contract receives from their escrow officer a form called an N289. And that N289 is essentially, it's a super simple form that has three boxes. And if you're eligible to check any one of these three boxes, and you check one of the boxes, you're eligible to get HARPTA waived, and you don't need to even apply for a HARPTA waiver. It's just kind of automatic. But of course, one of the boxes need to apply. So let me describe the three circumstances that somebody can get an immediate waiver of HARPTA. They don't need to worry at all. If they're a Hawaii resident, if they're a Hawaii resident, or their entity that owns the real estate is considered to be a resident entity, they can check the first box on that form N289, and HARPTA will not be withheld on the transaction. The second circumstance is box 2 on that N289 is for something that the state refers to as non-recognition provisions. So non-recognition provisions are things like 1031 exchanges. When you're exchanging one business property for another business property. If you do a clean 1031 exchange, and we can talk about that in a little bit, but a clean 1031 exchange will allow for an immediate HARPTA waiver. You don't need to worry about HARPTA. Another circumstance in the non-recognition provisions is if you have a couple divorcing, and this happens sometimes where one couple or one spouse is required by the courts to sell the property to the other spouse. If you have a situation like that and the spouse who is, selling their portion is actually going to experience a gain, then you can get a waiver of HARPTA in that situation. Self-directed IRAs, self-directed 401ks, those are situations as well. And another circumstance, this is something I've seen once, is if you are a citizen of another country that has a foreign tax treaty with the US, then you might be able to get a waiver of HARPTA immediately. So that's the second box. Third circumstance where you can get an immediate HARPTA waiver is if your home sale price is less than 300,000 and the seller occupied the home as their main home for at least the prior 1 year. And so if, I don't see this circumstance pop up very often. It happens once in a while, and it usually applies to somebody who's in military. But 300,000 gross sales price. So we don't see that number very often in this market. Haven't seen that in a while. So yeah, those are the ways to get kind of an immediate waiver of HARPTA. Those are I don't know if you'd really call them loopholes. Those are easy ways to just get out of HARPTA immediately without having to expend any money or hire anybody, right? Like our company.
Thanks for bringing those up. The 300,000, I think that the authorities should look at that threshold and actually bump that up based on inflation rates. I don't know how long ago they said that.
It probably made sense when the rule was made, but 300,000, it's like, I think that's probably less than 5% of the market at this point.
Maybe a parking stall in Kakao.
That's probably an extent of it.
So awesome. Those are great ways to, we'll say, avoid and not say loopholes. But how about, speaking of tax evasion, have you seen any cases where, or what is the most extreme penalty you've seen, if any, on someone who tried to evade HARPTA?
I think the harsh penalties are usually reserved for people who don't want to cooperate. And if somebody is working with me, they're only going to hire me if they want to cooperate, right? So I think the harsh penalties are reserved for people that I'll never see, which are people who don't want to work with people like me. But I am aware of people who've tried their best to evade it and have been hit with some harsh penalties. And because of the dollar amount of HARPTA, the penalties for evading it can be really, really harsh, right? Because HARPTA once again is 7.25% of the gross sales price of a home. And when you consider that, the average home in Hawaii is, somewhere around $1 million, that's $72,000, over $72,000 that is owed to the state. So the state takes HARPTA really, really seriously for good reason, right? This, generally speaking, and besides helping people to get HARPTA waivers, reductions, or early refunds, I've also been in a position where I've represented people who are being pursued by the state because they didn't pay HARPTA, and usually, the state doesn't really come down on those people if they're, like I said, they're willing to cooperate. And usually this is the way it happens. We talked a little bit earlier about, it's the buyer's responsibility. So if the state finds evidence of, HARPTA that should have been collected but wasn't, very first person they're going to contact is not the seller, it's going to be the buyer first, right? Because the buyer was responsible for collecting it. So usually the way, our company is kind of brought into a situation like this is, a buyer is contacted by the state. And the buyer, of course, panics because the initial contact from the state is usually something like, we have reason to believe that, the seller in this transaction was a Hawaii non-resident. It was your responsibility to collect, X amount of dollars. It's usually a large amount of dollars, 50, 60, 70,000. And because we see that it wasn't collected, now you're responsible, right? The first letter is always pretty harsh. And so the buyer panics. Usually the first thing the buyer does is contact their agent, and then the agent contacts escrow. Usually what will happen is escrow will go back into their files and they'll say, hey, you know what? The seller said they weren't subject to HARPTA because they claimed they were a resident, or they claimed they weren't subject to it because of one thing or another, right?
Yeah.
And then the state will, they'll inform the state that buyer isn't responsible because the seller made this, they made this representation about themselves that was improper, and here's the proof. And so the state will then turn their attention to the seller and said, okay, you're responsible for paying the HARPTA. And that's when, the seller, of course, will contact their agent will contact our company, and then that's when we'll get involved. And so usually, if it gets to that point, usually what the state wants is they may be willing to forego the entire HARPTA amount, if for some reason the seller doesn't have the money anymore. What they will insist upon, however, is to, if any tax is owed on that transaction, that they're insistent on at least being covered for that amount. So in the past, when we've been brought into kind of assist a seller who's getting into trouble with the state, the state has been kind enough to usually say, okay, you know what, help them do a calculation of what their what's called tentative taxes, which is, an approximation of what they're going to owe to the state when they finally do their tax returns next year, and we'll be satisfied collecting that amount. So in some cases, the state has been satisfied with, just getting that amount. In other cases, we've seen a couple of cases where, I've represented a seller where the state said, you know what, we want the entire amount of the HARPTA. You should have paid that at the beginning. We want the entire amount. It's your option if you want to file after we get that entire amount. It's your option to file for the early refund so you can recover some of that. But initially, we'd like you to pay what should have been paid in the transaction. And so, the state's approach can vary. Sometimes they're willing to, okay, we'll wait until we do your professionals do a calculation of the tax and we'll collect that amount. Or they say, give us the entire amount of the HARPTA and then we'll give you a refund of some of it. So that really depends. But that's kind of like, what usually happens if the state gets involved. I'm probably telling you more than you really asked for, but yeah.
No, good. This is good. Yeah. And, I was thinking about it too. Is like the beauty of these interviews these days. When you throw them on YouTube, you have those timestamps and those bookmarks, so we can jump. And I was thinking just about how you're talking about the form to check off. When the buyers are filling up, sellers are filling out the forms. Like, oh, I can just point my clients to that section in the video now. But anyway, I digress. Thank you. So my next question is because when I'm dealing with out-of-state clients and explaining to them HARPTA, the potential withholding, it's kind of like the cost of doing business in Hawaii, right? By right, the state doesn't want out-of-state investors to run away with what's due in taxes. So the way I try to explain it, and but to investors, that's affecting their cash flow. And so from my standpoint, I have my perspective, but I was wondering what kind of effect do you see HARPTA laws having on out-of-state investors, either potential or current?
Yeah, I do see that sometimes in certain circumstances it is a problem because we not only do these forums, but we talk to the clients and we hear their personal circumstances, right? I mean, when it comes down to it, there's a story behind every transaction, every home sale. And in some cases, what we've seen is people who've the HARPTA can get in the way of what they have planned in their next location, right? In some cases, I know you talked about investors, but let me kind of get to the example of military service members and having the HARPTA withheld. We see the circumstance quite a bit where somebody is being PCS, so permanent change of station from Hawaii Hawaii base to a base somewhere on the mainland. So they're selling their Hawaii home. Um, but the HARPTA is withheld, right? So in some cases, what we hear is somebody has already gone to their next location. Maybe they were looking around for a home and they found one home that they like. They put an offer down, but they need the money from the home sale of the Hawaii home, and they're counting on a certain dollar amount to come into their pocket. But then all of a sudden they get hit with HARPTA, and that that kills their plans about the house that they want to buy in their next location. So sometimes it does put a real crimp on your plans. In other circumstances for investors, same thing, right? They're planning to invest from the sale of one their Hawaii property into another property in the mainland, and so it does, it really does. But the state does this for a good reason. It's for protection of the state, and it really is a good reason, because another part of our business is once people have had HARPTA withheld, we help them do whatever they can. Other than income taxes, we don't do income tax returns, but we do GE, TAT returns, those kinds of things. There are a lot of people who might live in a house, move to the mainland, turn their house into a rental, but they're not aware of GET. They're not aware of Hawaii income tax return, filing responsibilities, and because of that, if HARPTA were not in place, Hawaii would lose millions. I mean, literally millions of dollars a year in people just selling their homes and disappearing. So there's a really, really good reason for it. But it's Hawaii does also to allow a pressure relief valve in the form of the early refund. So that's allowable. Also, too, the immediate waiver of HARPTA for people who are doing 1031 exchanges. A lot of investors will do 1031 exchange out of Hawaii into maybe a mainland property, and people are thinking, well, Hawaii allows them to do that without collecting HARPTA. I mean, they're exchanging it to another mainland property. The fact is that Hawaii does allow for that, but that's because if you do a clean 1031 exchange, you're not going to owe any taxes, and so Hawaii really doesn't have any reason to hold on to your money. Let me talk just real quickly about what I mean by a clean 1031 exchange, because I know I've talked about that a couple of times already. The rules of HARPTA state that if you're doing a 1031 exchange where you take all of the proceeds of the property that you're relinquishing, and then you sink it into the replacement property, exchanging one for the other without receiving any cash at all, out of the transaction, you can get a waiver of HARPTA. However, one of the tricks is if you pull any money out of the transaction at all, at that point, you're not allowed to get any waiver of HARPTA, so HARPTA would apply the entire transaction. So a lot of people think, oh, okay, well, I'll pull like 50,000 out because I need to do some renovations on my replacement property before I start renting it. But just realize by doing that, HARPTA will apply to the entire transaction. So if your goal is to avoid HARPTA, it's just kind of something to keep in mind.
I think that's called boot, right? Don't
Yeah,
mess with the
boot. Yeah, exactly.
Don't mess with the boot.
Any boot at all. Yeah, and yeah, that's a term that's confusing.
No, yeah.
Yeah, you
When
bring up
trying
boot
to
and then people are like, what?
yeah, I know. It's always talking about, I always explaining, we also can get partial deferral, right? But I digress again. So, but
Yep.
so you mentioned 1031 exchange. So here's a little specific question.
Okay.
If I'm an out-of-state investor doing a 1031 exchange and I'm subject to HARPTA with, I'm not subject if I'm doing a clean 1031 exchange, right? So I won't be subject to HARPTA. Do I still need to file a state tax return?
Oh, that's a great question. Yes, you do. Anytime that you have any sort of real estate property sale uh, in Hawaii, that's considered to be Hawaii source income. Even if it's a little bit misleading because it's considered Hawaii source income, even though you don't have taxable income. But nevertheless, it's considered income nonetheless, and so you would need to report it to the state of Hawaii. If if that is like the extent of your activities in Hawaii, is the 1031 out of Hawaii to another property, you probably won't have to pay any tax, but you still need to report it anyway. But of course, in most cases, investor has been used to doing that, right? Because if they're holding a property that is eligible for a 1031, it was probably a rental, and almost for sure it was a rental. So they should have been doing Hawaii income tax returns anyway. So they're already used to kind of filing Hawaii income taxes.
Oh, cool. Okay. Okay, here's the last question.
Oh,
Is there any questions that I should have asked you that I didn't ask you?
oh, yeah. That's you know what, well, one area that I think and it's usually something I talk about right at the very beginning, but I think I skipped is one of the things I do see is, or I do hear rather, is the panic in a seller's voice when they're talking about HARPTA, because usually when a client is referred to me, it's usually shortly after they've seen their first estimated seller statement. And for those people who know a little bit about home sale transactions, the estimated seller statement is something that you receive from escrow shortly after you accept an offer, as a home seller. And what it has is, at the very top, it has the price that the offer that you've accepted, the price that you're going to sell the home for, and then all the subtractions that go into it, and then at the very bottom, how much cash you're going to put into your pocket. But if you have HARPTA applying to the transaction, it's usually a really large amount of money, right? It's usually 50,000 at least, usually a much larger amount than that. So, a home seller sees that amount and they start to panic, and they call me. I think for somebody who's in real estate, if you're a realtor, or if you're home seller yourself, one thing to keep in mind: this is a withholding. This is not a tax. And the difference between the two is that a tax is an amount that the government takes and they keep forever because it's theirs, right? They're not going to return anything to you. Whereas a withholding is an amount that the government takes and they set aside in anticipation of possible future taxes. So once you can prove to them that you don't owe what they are holding, you get a refund, right? So it's, in many ways, it's like a security deposit if you're renting a property. It's something that they hold to secure themselves, and that's exactly what HARPTA is.
Yeah.
So one thing to keep in mind is that most of the home sellers get most of their HARPTA money back. Some
That's a
people
good
get all
point.
of their HARPTA money back.
Right.
So don't panic about it. Just remember there are ways to get at it, and just
Right.
inform yourself as to the ways to get your money back.
That's a really good point. So I take that one step further and I tell my clients, go talk to your tax CPA because they can run, what the potential tax implications are. And then that's your delta, right? In terms of what you're actually going to get back. So
Exactly.
I love that point. That's a really good point.
Exactly. Yeah. Contact your CPA or contact harpta.com.
Oh, there you go.
Yeah, yeah.
And that was my closing questions. How can we reach you?
Oh, yeah, yeah.
Right.
So our website is harpta.com, and I have information also too. I have some videos on there if you want information about calculating gain or loss for HARPTA purposes, you want a little bit of understanding about the entire, HARPTA process, what this is about. I have a video on there about military home sellers, something specific to, military service members. Or you can just give us a call. We give, I give free. I'll be able to discuss your situation for free over the phone. I give offer free 15-minute consultations to
Oh,
potential
okay.
clients, and
Okay.
I'll be happy to talk to anyone who's in that circumstance. But thank
Cool,
you so
cool.
much, Dean, for having
Thank
me on.
you,
I
thank
really
you.
appreciate
No,
this.
thank you. And I'll put your contact information. I'll get it from you. I'll put it all in the comments below, yeah,
Sounds
on
good.
the
Sounds
YouTube.
good.
Okay. Well, thanks, Brett, for your time, man, and have a happy holidays, man.
You too. You too. You take care.